let's ask Andy Brough if I can get my teeth in. He's co-head of Schroder's pan-European small and mid-cap team. Andy, a very good morning to you. Reaction to those figures, interesting figures, they beat.
Yeah, the thing is, you know, when you look at a bank's figures, there are an awful lot of numbers, okay? And the problem with the banks is what is the detail behind this? Because you've got a crazy situation where banks are actually increasing their profits by taking, you know, profits on their debt, which is trading below par, for instance. So the devil's really going to be in the detail.
Is that the debt valuation adjustment that a lot of these banks?
Yeah, but basically, you know, if I lend you £1, yeah, and your creditworthiness goes down, so it's only worth 50p, I can then award myself a profit because my debt is actually, you know, worth less to buy back. Crazy world in which we live in, but that's accounting for you, and that's taken as a profit. So I think Barclays, with the numbers, you know, all the different moving parts, people really want to get down into the detail and see how that number's made up. You know, it's not just impairments, it's not just, you know, the fact that they're lending less money to Italy and Spain and all these other things. It's what's really happening behind all the lines in their P&L accounts. Because, you know, when you've got a big thing like Barcap, which is making profits from a huge variety of sources, people want to get some feel for, A, what is the sustainability of that, and B, you know, is that going to come under increasing pressure going forward?
Well, just how dependent is Barclays on its investment banking arm? Quite significantly. What's Bob Diamond's strategy here?
Well, Bob Diamond wants to rule the world, right? So, you know, that's the case there. And basically, Barcap, it's far easier to increase profits exponentially through an investment banking operation than it is through a retail banking operation. So Barcap has been and will continue to be a big driver for this share.
And how does Barclays, from what you've seen on those initial figures, comparing with its peers, notably here in the United Kingdom, but also abroad too?
Well, let's look at the UK. You know, RBS and Lloyds have a much, much smaller sort of investment banking arm and are really dependent on driving profits from increasing the quality of their loan book, reducing impairments, increasing the interest margin, especially Lloyds. If you look at HSBC and Standard Chartered, then their growth really is coming out of what's happening primarily in Asia. So Barclays is pretty unique in having a much larger investment banking arm. And the concern's got to be, you know, with Vince Schaeuble jumping up and down, saying, you know, if you do split out sort of the casino bank, as he calls it, and the traditional bank, what impact will that have on Barclays? And, you know, that is one of the uncertainties overhanging the share price. And again, at the analyst meeting today, I'm sure that's one of the things that will be raised.
Andy, the thing is, realisation would appear to be creeping back into the market about the deal that we had in Europe last week. Just how much volatility are we going to see, can continue to see, in some of these financials and banking shares?
Well, we didn't really have a deal, did we, in Europe? We had a load of politicians getting together and saying, yep, you know what we're going to do? This is what we're going to do. There was no, you know, a deal is something which, you know, with if you sign off on a contract, that's the deal.
Even though Barclays jumped 70% on Thursday.
Yeah, but that's, you know, the volatility in the market. You know, people always hang on to hope, don't they? You know, when the market's gone, you know, the market was 7,000 at the start of the decade, now it's 5,600. And, you know, when people see share prices go down a lot, they're clinging on to any bit of hope, saying, yep, they're going to go back up. And, you know, especially the financials, because the swings are so great. You know, if 1 minute Greece is going to default, and the next minute it's only going to take a 50% haircut, next minute, you know, Italy and Spain are in terrible trouble, the next minute they're going to be all right. So if you're a bank and a lot of your assets are effectively in these sovereign debt, then the volatility in your share price is going to reflect what people are feeling about the overall state of the euro.
So what is the biggest hole that you can see as far as that so-called deal was arranged last week?
Well, basically, it's very simple. Where does the money come from? You know, when I was a kid, I used to have a printing press and sort of make pound notes and try and pass them off to my parents and failed miserably. You know, and you look at sort of what's happening in Euroland now. We're going to take, you know, people are just throwing numbers around. You know, we've got the ESFS, 400-odd billion pounds. Let's lever that up to 2 trillion. Really, I mean, you know, so people are concerned. Where does the money come from? And it's got to be real money to make a difference. That's the key.
Moving on to what's happening in Europe, Wolfgang Schaeuble, Germany's finance minister, wants the EU to take a global lead in introducing the Tobin tax to curb speculative trading. Is that a good idea?
Well, it might be a good idea in Europe. I think it would be a disaster in the UK, and it's quite interesting that you know, the UK is very much the centre of finance throughout Europe. So it's very easy for someone in Germany or other countries in Europe to say, yep, that's a great idea. It's going to affect us much less markedly than it is in the UK.
There's no way that David Cameron and Mr. Schaeuble are going to go over to accept that, though.
There is no way. And again, it comes down to the point that you know, to finance this whole Euro dream, you've got to get the money from somewhere, and people are now scrambling around, looking under sort of, you know, cushions and carpets, etc., saying we need to get some money in to lever this thing up so we can then protect the countries, rather than saying, let's look at these countries and see the way they run, and actually, you know, Italy and Greece, it might be a good idea if you went and collected some tax.
That's where we shall leave it. Andy Brough, Executive Director at Schroder Investment Management, thanks very much indeed for being with us on Bloomberg this morning.